What's up, everyone? I'm Joe Pomp, and this is the Joe Pomp Show. Today, I want to talk about professional athletes and their tax situation at the end of every year. Now, some of you may already know that the average NFL, NBA, and MLB player has to file anywhere between 10 to 25 different tax returns each year. And some of these athletes are actually paying $1 million or more in taxes for states that they don't even live in. This is called the Jock Tax. But the part that you probably don't know is that it all started with Michael Jordan. The story starts in 1991. Michael Jordan and the Chicago Bulls had just beaten Magic Johnson and the LA Lakers in the NBA Finals. They partied for a few days and then returned to Chicago for the championship parade. But when they got back to Chicago, Michael Jordan's accountant got hit with a notice from the state of California. They wanted him to pay about $10,000 in taxes for the days that he spent in California during the NBA Finals. Now, obviously, Michael Jordan was upset, and Illinois decided to get some revenge. So they passed a bill that's now famously known as Michael Jordan's Revenge. This stated that any residents from California, professional athletes or high-level entertainers that performed or earned money in Chicago now had to pay a tax as well. This then spread from there, and now every single state except 5 in the United States, so 45 out of the 50 states, have this tax. The 5 states that don't have it are Florida, Nevada, Texas, Washington, and Tennessee. And it's gotten so bad that some individual cities have even implemented the tax themselves. Those cities are Cleveland, Kansas City, Philadelphia, and Detroit. And for context, this money can really add up. Take Stephen Curry, for example. We have this chart here from Bloomberg Tax that breaks down how much money he paid during the 2018 season to each individual state. He paid about $1 million in total in the Jock Tax to nearly 20 different U.S. states. And when you look at the individual states themselves, it's rumored that California collects hundreds of millions of dollars every single year just from the Jock Tax. This includes $233 million that was made public in 2013 that they collected from this tax themselves. Now, this obviously complicates the process at the end of the year for these athletes. They're not doing it themselves. It's not like they log into H&R Block and they try to file all these returns themselves. Obviously, they hire an accountant and a CPA to do it, but ultimately it makes the process more difficult. For example, Patrick Mahomes, looking at his schedule this year, he'll have to file at least 7 different tax returns. Shohei Ohtani in the MLB will file at least 11, and Kevin Durant, one because he's in the NBA, but also because he got traded, will have to file more than 20 different tax returns this year. And the one interesting thing that I noticed while researching some of this stuff is that athletes seem to be getting smarter about how they operate in and around the tax system. Tyreek Hill is the perfect example. Now, some of you probably know that he was on the Kansas City Chiefs and he got traded to the Miami Dolphins last year. But there was actually 2 teams that he was deciding between to get traded to. One was the New York Jets and one was the Miami Dolphins. And he actually admitted last year that he was close to going to the New York Jets, but ultimately taxes played a huge role in it. And when you look at his contract and the taxes that he would have had to owe in New York and New Jersey versus Miami, there's a huge difference. So I have the numbers here. He would have had to pay about $475,000 for away games, the Jock taxes at away games, as a member of the Miami Dolphins. But the Miami Dolphins, being in Florida, don't have a state income tax. So he gets taxed at 0% there versus more than 10% in New York and New Jersey. And the reason why this is important is because he would have saved, and he did save, about $2.7 million on his contract just last year. And that's just the first year. When you add up the remaining 3 years on his contract, he'll save in and about $10 million on his contract. That's obviously a substantial amount of money. The other good example I think here is Floyd Mayweather. Floyd Mayweather, over the last 10 years of his professional career, from 2007 to 2017, every single professional boxing match that he fought in was in Las Vegas. Obviously, Vegas is the fight capital of the world. They produce the biggest gate and so forth. But he did that for one specific reason, and it's because they don't have an individual income tax. He was able to save what is a reported amount of about $20 million during those 10 years. So he fought all of his fights in Nevada, no income tax, saved $20 million over 10 years. Obviously, that's a substantial amount. The most obvious question off of this is, doesn't this offer a huge advantage to the teams that are in low-income states like Florida, Texas, or no personal income states? And the reality is it should, but it really doesn't matter all that much. 538 did a cool study in 2020 that analyzed the results of basically every team that made it to the championship or won a championship and what state they live in and the relevant tax for that state. And they essentially found that there was no correlation between states with low income taxes or no income tax and winning championships. Actually, Massachusetts, New Jersey, and California were all in the top 10, and Nevada was the only state with a 0% tax rate in the top 10. And the only reason why they were actually in the top 10 was because they had just gotten the Las Vegas Golden Knights of the NHL, and they made the Stanley Cup final in their first season. So there's statistically no real correlation between this. Now, this doesn't exactly just apply to athletes. Anyone who travels to different states for work has to pay this tax. Not everyone does it, and the government really doesn't track it that hard. One, because athletes, their salaries are public and their schedules are public, so it's easy to do there. But two, they're making such a substantial amount of money. I mean, Stephen Curry's salary in 2018 was $38 million. He's paying $1 million. He traveled to Toronto for one game and had to pay over $200,000 in taxes for one game. That's a substantial amount of money when it comes to tax revenue. Like I said, California is making hundreds of millions of dollars off this every single year. So it makes sense for these states to have people and to pay salaries every single year to track these numbers. Now, some people are wondering if this will go away. My personal opinion is that it will not. If you think about salaries across professional sports, what are they doing? They're only going higher. These states are obviously collecting a lot of money already off of these taxes, off the Jock Tax, and it's only going to get more. So don't be surprised to see these states get more aggressive, the states that aren't currently doing it implement it, and more cities to implement it too. I don't personally think it's a great thing. I think it makes it more confusing. It's all tax money in general. It's just one state stealing from the other, but that's what happens. That's how greedy states are when it comes to taxes, and we'll see more of this coming in the future. If you enjoy this video, please make sure to subscribe to the channel. I'm doing these videos at least 3 to 4 different times a week, breaking down the most interesting topics in sports business. So like, comment, tell me what you enjoyed, what I can be doing better, subscribe to the channel. And if you want, these videos and these audios are done on the Joe Pomp Show. Go subscribe on Apple or Spotify, and you can listen to the full episodes there. Thank you so much, and we'll talk soon.